Hello, my name is Damaris Venegas, and my research paper is over FASB's proposal to change topic 944 in the codification. The proposal includes changes to the assumptions and discount rates that are used to measure the liability for future policy benefits, new models for benefit features, updates to amortization of deferred acquisition cost, and additional requirements for disclosure. So the proposal came from comments from statement users, which mostly include insurance companies, that they were having trouble preparing their financial statements. Certain items were out of the guidance were out of date, and they wanted an update to this. So according to FASB and Focus in 2013, FASB began to develop Topic 834 to improve the reporting for insurance contracts. But insurance companies came back and stated that they didn't want a new way of reporting. They just wanted an update to ASC 944, which is the topic that is used for insurance, the guidance that's used for insurance contracts. So the current updates for this from this proposal are as follows. The first update is current assumptions for discount rates to measure the liability for future policy benefits. So currently, when these assumptions are locked in once the contract is created, so they are the same from beginning to end. Um, so the FASB came back and in their proposal and stated that these assumptions should be updated more frequently because insurance companies also stated that this was really out of date. With this proposal is there's also going to be the removal of a provision for adverse deviation, which is an explicit amount to make some provision for uncertainty in an asset or liability. The next update is the new models for benefit features, which the proposal gives a new category, which is the market risk benefits model. And this market risk benefit model will be the guidance that will be used for this is ASC 815, which is the fair value measurement guidance. And the market risk benefits model will be using a fair value measurement. To determine which model the benefit feature lies under, insurance companies first have to determine if it's under a market risk benefits model. If it's not, it'll be under an embedded derivative model, and if it can't be measured under that, it'll be measured under the liability benefit ratio model. The next update is the update to the amortization of deferred acquisition cost. Um, Insurance companies stated that the current guidance for this is very complicated and they wanted a simpler method. So FASB proposed the removal of the current models that are used, which is the estimated gross profits model and the estimated gross margins model. Those will be eliminated, and the FASB stated in their approach the update to a straight line approach to make it more simpler for insurance companies. So the final update is on disclosures. The current disclosures do not provide enough information for statement users. The new disclosure requirement will include liability roll forwards and qualitative and quantitative information about inputs, judgments, and assumptions used in measurement. The disclosure updates are for future policy holder benefits, policy holder account balances, market risk benefits, separate account liabilities, and deferred acquisition costs. So, FASB recommends updating the cash flow assumptions more frequently, but I recommend that they keep the provision for adverse deviation the provision for risk for adverse deviation and other testing, and not require the assumptions to be updated more frequently. Currently, um, gathering information on these assumptions and also the resources that will be needed to gather this information, they're costly, and unless the insurance company wants, unless they want to spend their time and money in getting services from actuaries and accountants that specialize in this field, um, it'll set some of them back. It'll affect them a negative way. So a simpler or a more cost efficient way is to keep that provision for adverse deviation still intact in the guidance and not report it more frequently. The the proposal for the market risk benefits model, that will help insurance companies a lot. The fair value measurement really provides more valuable information and it helps avoid risk. So I believe that this model is really overdue. Fair value has proven to be one of the best measurements in many industries. So it'll help a lot for insurance companies. Also, the update to the guidance on deferred acquisition costs will also help insurance companies by saving resources by eliminating those current models that they have and updating that straight line approach. And also, the disclosure updates will also be beneficial for insurance companies because statement users will have a better understanding on the methods, judgments, and um, anything else that was used in order to prepare the financial statements. So that is the end of my presentation, and thank you for your time.